traders, Gary Wagner with the gold forecast. It is the 17th day of December. It's Friday with about 20 minutes left to go in trading activity for the week. We have gold trading higher this morning, up about $5 to $6, currently trading $13.74, $13.75. On today's report, we will look at our outlook for next week. We will also talk about the activity that we've seen over the last couple of days. All here on today's daily report, our weekend review. We are looking at a 120-minute candlestick chart. Each candle represents 2 hours in trading, and this is also the chart for traders that follow our daily review that we introduced this week, in which we talk about Fibonacci harmonics. Fibonacci harmonics is when you have different Fibonacci retracement sequences and you look for ones that match up. An example is this right in here, this 1400. As you can see, it has multiple retracement levels all at this point, and thereby it infers more strength. However, on this chart, what I do want to look at is the bottom that we formed and where we think it might have been formed from. As you can see, when it broke this 61% level yesterday at 1369, the real next level was 1354. That's the 76% retracement level. But it did find support right in this area. When I looked back, the only thing that I really could find, traders, in terms of an area in which this matched up with, is these sets of tops that we have right in here and here. And as you can see, these were resistance and then became support. And we had breakouts above both areas. And as you can see, if we follow this line this way, this is that area that we found support. And it does at least tentatively look like it is breaking back to the upside. Now, traders, the one place where I did find a support level, which was Fibonacci based, this is a 60-minute, a 1-hour candlestick chart. And as you can see here, when I run a Fibonacci retracement from this high here at 1423 down to this low here, this is 1330, 1328. What you will notice is the 61% level here does also match up quite nicely with this bottom that we are seeing in today's marketplace. Now, what I have done is I have turned this into our Henkin chart. Again, realize a Henkin chart is an average chart. An average chart is always going to lag behind any of the candlestick indicators or patterns that we find, because they tend to be leading indicators, along with Fibonacci or Elliott wave, because those tend to do forward projections. But as we look at this chart, I'm going to blow this up for us. I think you can see that as the market came down and touched this 65 area, the body size got very, very small. It did tend to try to rally right up to the 75 level. And of course, right here is where it seems to have found some resistance, both here as well as at the end of today. But you can see, at least for the last couple of hours of trading, this is 1, 2, 3, the last 5 hours trading, it has come off of the low of 1365 and it has moved up to 1375, where I believe it's going to close today. And traders, to recap the week, remember, we did enter a long position. The position that we entered was at 1385. We have moved our stops up to 1350. My recommendation for the weekend is going to be to maintain our long position and to maintain our stop. Now, if we do see support come into the market, and my one fear is as we get close to Christmas, we could be fairly range bound within gold itself. In other words, it could trade within a tight range. But if we see that this support level right in here is going to absolutely hold, and we see some upward momentum, what we might look to do is to dollar cost average and to add more positions to gold on the long side at the beginning of the week if we see solid activity, which tells us that the market is forming a base. This has been Gary Wagner wishing you, as always, good trading, and we'll talk to you tomorrow for another daily report. Bye-bye.